Hey guys, it's Ed. The future is now, and the future is $650 per share for Tesla. I had to give a little pause there. Just look at the chart and tell me I'm wrong. I want to go into a bunch of stuff. We have a lot to unpack, but I want to break it down in a real easy, concise manner today. I don't want to run a huge, long video here, so I want to keep it pretty short. Anyway, the earnings report came out, and I read all over the earnings report, and I just want to sum up some key data. Okay, the first key, more cash. 930 million increase in cash. That's pretty big because last quarter they increased by 300 million. So they tripled their cash. So that's pretty significant as far as long-term growth. Okay, 1 billion in operating cash flow less capex. Okay, that's the free cash flow in Q4. That's huge. That's like a monumental number because it really gets them in the right direction again. So profitability, 359 million gap. Okay, we've got let's see, 386 million non-GAAP net income in Q4. So profitability, they're pretty strong. They spent a little bit more money. Obviously, they added superchargers and whatnot. We'll get into that in a minute. Let's see, operations. Oh, okay. Model Y production ramp started in 2020. So they already started it. It wasn't even supposed to be started until June. Now they're basically already starting the ramp for this production, and they'll probably have cars produced, fairly shortly, within a month or two. So they put that they increased the Model Y all-wheel drive range to 315 miles from 280 miles. So that's a nice boost. Record vehicle deliveries, we all know that, 112,000 in Q4. But Q4 is obviously the biggest quarter. I expect them to hit maybe 80 to 90,000 deliveries in Q1. Q1 will always be the weakest quarter for Tesla. Be prepared for that inevitability. Record Q4 storage deployment. This was a surprise to me. I just didn't expect a lot of people to be buying a lot of solar in the last 3 months of the year, but that's a big increase. I'm not sure how that broke down, but 530 megawatts, up 26% solar growth quarter to quarter. So let's see what we got from here. So I don't want to just read everything out to you. You can see the summary on the right and read it. You can pause the video or whatever, maybe check it out from there. So anyway, 2019 turning point for Tesla. I believe in that, and that's why we jumped on the stock at 240 a share. 240 is when we started buying, and we've been buying ever since. So anyway, let's see. Achieve strong cash generation. That's correct. Let's see. Execution was good. A lot better now that they know what they're doing. So the Shanghai should be a lot better, and we'll get into that when I show you the photo of the actual factory comparisons that they have. Let's see. None of it would be possible without the demand for the products. Of course, that's the number one thing. They're making a great product. And they sum it up with higher volumes driven by Model Y and Shanghai factory, continued improvements in operating leverage, and further cost efficiencies should allow Tesla to ultimately reach an industry-leading operational margin. That's the key word there. Okay, the key figures are in pink for Q4. Automotive revenues up $1 billion, 5.3 to 6.3. Let's see. The gross profit up as well. Gross margins down slightly, but pretty slightly. So I'm not sure what that was due to, but that's a very slight decrease there. Total revenues 7.3 billion, up from 6.3 billion. Obviously, more cars sold. Total gross profit also up 200 million, and total GAAP gross margin 18.8%. Operating expenses 1 billion, income from operations 359 million, operating margin 4.9%. That was actually up. As you can see, the difference 5.7 minus 11 minus 2, 4 and 4.9. Now we have, let's see, I'm going to skip this. Let's go right to EPS. Non-GAAP 2.14 earnings per share versus 1.91, which killed it last quarter. Because actually they expected a loss and they got a gain. But still they're gaining here, which is pretty significant of a beat. Okay, it was not a massive beat, but it was pretty big. Finally, capital expenditures. They keep increasing capital expenditures. That's good. They're spending more money to develop more products. Free cash flow, though, 1 billion, that's insane. From 371 million to 1 billion, that's crazy. Cash and cash equivalents, now they have 6.268 billion in the bank. That's huge over the 5.3 billion that they had in the bank last quarter. And this chart just shows the production capacity from Tesla. You can see the Fremont at 90K for S and X. You got 400,000 for 3 and Y. That's about 500,000 from the Fremont factory, which is exceeding what they were supposed to do. And then the Shanghai factory is saying Model 3 is 150,000. And they said also that the Model Ys, it's not listed here, but should be about equivalent to that. So about maybe 150,000 there. But they're projecting 500,000 pretty comfortably in 2020. So they're not going crazy and saying, oh, we're going to do 700,000 cars. That's not realistic, first of all. And second of all, they do not want to over forecast, and underperform. That's just not a good idea for any company. You can see Berlin is in development, and they're going to produce Model 3s and Ys there. You got North America, they're going to produce the Semi, the Roadster, and the Cybertruck, and they're saying in development. I mean, I'm not sure where they're producing these exactly. I'd like to know that one. Are they going to build another factory in North America? I talked about that before, and I keep wobbling around from Australia to there, but I don't know what the plans. So speaking of the factory, you can see the difference in the Fremont factory and the Giga factory. Okay, super streamlined on the right, super simple. Simple is better, faster, cheaper. Okay, and you can see the complete disaster basically that they have at the Fremont factory. The reason they showed this is, are we going to be better at the Gigafactory in Shanghai? Of course, they're going to be way better, faster, and cheaper because of this. They're not having to move stuff from all over the place at the factory. From stamping, you can see, to body and white, to general assembly, to paint shop. It's all problematic, and now they've learned from that, and that's why they're going to build the factories pretty much just like this everywhere that they build them from now on. Because this, I mean, unless they find better ways and then easier ways, but I think this is pretty simple the way they have it laid out. Okay, just a quick, brief operational summary. You can see the Q4 in pink again. You can see the production of the vehicles. We all know it's summed up to 112,000 as far as production. 86,000 production of the 3 and S and X 17,900. And now let's see, what else do we have? Solar deployed. There, take a look at solar. Going from 43 to 54 for megawatts, and megawatt hours storage deployed went up 477 to 530. Both increased by 26% and 11% respectively, year over year, 136%. So that means their solar storage is going to be a key moving forward. That's definitely going to help the company all around. Store and service locations, they added some there. They're not going crazy there, but they're adding more. But the mobile service fleet, they're adding more to that. Supercharger stations, they added almost 2,000. Just short of 2,000, maybe, just short of 2,000 on that. So they added a few hundred superchargers, and they have 1,800 total superchargers nationwide. So they added, if I'm reading that right, so they went from 1,653 superchargers to 1,821. So they're adding about 170 superchargers every quarter. That puts it at about 50 to 60 superchargers every month. Which means if you're going to get a Tesla and you don't have a supercharger next door, they're building them constantly. So they're going to be everywhere. They have to put these all over the place, and they're going to continue growing this virtually indefinitely. And you can see the supercharger connectors, they have 16,000 supercharger connections. So I guess on average, that's 8 chargers per stall. If you break it down, right, 2,000 times 8 would be 16,000. Now, vehicle deliveries and free cash flow. We understand the vehicle deliveries, but you can see in red the free cash flow. So 5 out of the last 6, they've had positive free cash flow. Galley was just on television on Yahoo Finance, and I was watching him, and the guy was acting like, no, they don't have free cash flow. It's right here, 5 out of 6. The data doesn't lie, the numbers don't lie. Okay, you can see that plain as day. I don't know why he was arguing that point there. And then obviously you can see the operating cash flow as well. So that's pretty strong on top of it. And then you have the vehicle deliveries, obviously the vehicle deliveries, and they show the arrow right when the Model 3 ramped to 5,000 a week. You can see when they added the Model 3 ramp, it just instantly made the company profitable with cash flow. That is a massive difference. You can look at the past trend. This trend is what tells it all. The trend in the stock will follow this as well. So let's talk about the core technology, which is my favorite part. This is why I saved this last couple slides for last. Okay, the autopilot is going to be huge. Obviously, it is huge now for saving lives. Full self-driving, FSD, that's a must. Let's see, what are they saying? 3 billion miles driven on autopilot. 3 billion. Okay, that's real world data, not simulated. Okay, that's huge. It's a fleet, and it's going to keep growing exponentially. The FSD computer has been updated with new software that can better detect new details in their environments, allowing us to show various lane markings, traffic lights, stop signs, cones, as well as other vehicles and road users. Let's go to the vehicle software. Q4, we launched premium vehicle connectivity for $9.99 plus tax per month. We had a whole video on that. You can go check out, well, not really a whole video, but you can check out one of my stock videos on that and how it boosted the stock instantly. Let's see, introduce the in-app purchases where customers can buy various software updates such as basic autopilot FSD, acceleration boost, and additional premium features. Software will play a big role. And with the battery and powertrain, they're talking about the increased EPA range, 315 from the 280. And that's with the Model Y all-wheel drive. So I think it has to do with their wiring. The less wiring, the less weight, the more miles you can go. I think that's all going to be down. We'll find out about more of that in the battery day. Can't wait for that. That's going to be super exciting. And hopefully I wouldn't say, actually, I take that back. It's going to be incredibly boring. Okay, if you don't know anything about batteries, which I don't. So, it'll definitely be interesting to learn about. Put it that way. And they show on the right-hand side in red the Model Y all-wheel drive at 4 kilowatts per hour versus the I-Pace, the Mercedes EQC, the Ford Mach-E, and the Audi e-tron. That the fact they're just going to beat the competition is what they're saying here. They have a significant lead, and the lead just keeps growing. These companies, everybody keeps saying the companies are going to catch up. Eventually, they'll catch up. I'm not sure. They may actually fall further behind. You can't always say that somebody's just going to catch up. Okay, now getting to guidance or outlook. Okay, for 2020, they're saying 500,000 units comfortably. Okay, they're not saying 600 or 700,000, like I said. They're not going crazy. They're just going to incrementally increase here because they have to, finish the Shanghai and get that ramp kind of going. And then they're still dealing with Berlin. They got to get that factory built. So they're just being conservative here, which I like, because then if they beat their conservative estimates, the stock goes flying. Since we have Tesla stock, that matters to me personally. So anyway, and let's see, solar. Both solar and storage deployments should grow at least 50% in 2020. That's pretty high. So I want to see if they can hit that number. Let's see, cash flow. We expect positive quarterly free cash flow going forward. Is that permanently? With possible temporary exceptions, particularly around the launch and ramp of new products. Okay, that makes sense. We continue to believe our business has grown to the point of being self-funding. That means they don't need to borrow money. People, oh, what if they have to borrow money or they blah, blah, blah. No, they're done with that. Why would they have to borrow money if they're generating, positive cash flow? They shouldn't have to borrow anymore. They could, but they're saying they don't have to anymore. That's what that means. Okay, profitability. We expect positive GAAP net income growing going forward with possible temporary exceptions, again, particularly around the launch of new ramp. Okay, which probably Q1 is going to be a little slow. So production of ramp of Model Y in Fremont has begun, way ahead of schedule. And this is key. They finished the Shanghai factory fast. They're getting things done faster. Elon knows, he's an engineer. He knows how to do things quicker and faster, and he's working with thousands of super smart people to do this. It's not like he's the only one trying to figure this out. He just knows his plan, and this is why the jockey driving the horse, if a jockey gets on the horse and just sits there, the horse isn't going anywhere. So it's critical that he just maintains and keeps growing this company. He knows how to do it. He knows what he plans. They planned this like almost 20 years ago. So think about it that way. And it's finally coming to fruition. Their stock price should be going up. Think about it that way. So let's say we're planning to produce limited volumes of the Semi this year. And that's, to me, just testing. They have to get these semis out. They got to test them. They got to get the autopilot. They're dangerous vehicles. They can't have a Semi crashing. So all in all, this was an awesome beat. It wasn't a huge beat in my estimation, but it was a beat, a real solid beat. And that is throwing the stock up right now. So to sum it up, I hope you guys like this quick summary in general, and be sure to like and subscribe, hit the bell notification. It really helps the channel so we can post more videos and keep you guys up to date. You shouldn't have to do all the research behind everything. A lot of times you can just go and find the research. I grabbed the stuff right off of Tesla, and thanks to Tesla, and I congratulate the company for doing everything that I expected them to do since I started following Tesla. It wasn't that long ago, but I followed them at the right time. Absolutely. Right when they break that point of no return, but in a positive way. So you can still see the stock is up like $68 a share. It's right around $645 to $650 right now. So that's pretty incredible. And anyway, I hope you guys had some shares of Tesla. I wish you guys all the best.